In the market turmoil ravaging risky assets, cryptocurrencies have not been spared. Like equities, digital assets have been hammered by the impact of rising inflation, interest rate hikes, Russia's Ukraine war, and supply chain worries.
We're in the realm of a normal correction in crypto terms, which is nearing about 75-80%. Anyone's guess where we are in terms of bottoming or not. Typically, when prices go down so much, people start questioning the technology and start questioning whether this will survive.
Luno, a cryptocurrency wallet and platform, has more than 10 million customers in 40 markets across Southeast Asia, Europe, and Africa. It has added more than 1 million customers in the past 6 months, despite the downturn.
We continue to sign up users, we continue to see volume. Of course, we're not seeing the same sort of volume as we saw a year back.
In dollar terms, the latest crash is the worst in crypto history. From an all-time high of around $3 trillion in November last year, the total market cap for global cryptos has fallen below $1 trillion. For Bitcoin, the past 5 years have been a series of bull and bear markets, culminating in prices hitting over $68,000 in November 2021. In the first week of July 2022, it's down 70% at around $20,000. Meanwhile, Ethereum is down 76% from its peak in November.
There are similarities. In the last downturn, we see funding dry up, we see retrenchments. The key difference is really a lot more institutional investors are in. The products are more complex compared to the past.
The losers broadly have been more centralized finance players that over-leveraged themselves and tried to kind of loan out more money than they should have. Being a bit more greedy for returns and so on. That never plays out well, right? So you've seen the likes of Celsius and Three Arrows as well kind of play out here.
Zach Chia is the founder of a blockchain company that wants to make spending crypto easy with point-of-sale devices. He says the company just added new merchants in 6 countries. But the downturn has taught him some lessons for his personal investment portfolio. He bought his first Bitcoin in 2016 at around $700. He then accumulated other digital coins to make up 15% of his investment portfolio. Within a year, this grew to over 90% as Bitcoin prices hit over $19,000 until they crashed in 2018.
Seeing an asset class that you hold went 80% down is quite painful, obviously. It's just a glass half full or glass half empty kind of perspective, yeah. But always the first winter that you experience is always, quite mind-blowing, yeah.
That crypto meltdown taught Zach to scale back his crypto holdings to just over 50% and put stopgaps in place.
The second winter hasn't been so painful. It's something that we expected to happen, just that we didn't know how to time it. I actually see crypto and blockchain to be as big as the invention of internet, maybe even bigger. So what the internet did to information flow or how library is constructed, I think blockchain and crypto will do to finance.
I mean, now we're at least there are 100 million people or more that own some form of crypto globally. 3 years back, that was maybe 10 million people. In a couple of years, when we'd be speaking, we'd probably be at 1 billion people.
In 2021, global crypto adoption jumped over 880%, driven by usage in emerging markets such as Vietnam, India, and Pakistan.
We've seen a very strong peer-to-peer movement happening in those countries. We also have, we were talking about countries with very young populations that are more tech savvy and are more prone to explore cryptocurrencies.
Chainalysis is a blockchain data platform that provides cryptocurrency investigation and compliance solutions. In the aftermath of the current downturn, Chainalysis says more industry consolidation could take place.
Regulation is a short-term disruption, but is a long-term need for the industry. Some of the smaller players might be acquired by larger players.
Industry players say the crypto market's recovery all depends on macroeconomic conditions and containment of the contagion arising from the collapse of big crypto players.
Cryptocurrencies, highly volatile with uncertain utility value. It is certainly high risk, and I think that most of the 20,000 cryptocurrencies out there are unlikely to survive in the long term.
The saying, "hold on for dear life," might have become popular in the crypto world, but stakeholders remain bullish about the underlying technology.
The tokenization of loyalty points. We are seeing that a lot of big brands like Nike, Adidas coming into this space, embracing Web 3.0. I think the other driving factor will be related to game finance, or what we call GameFi, because gaming is something that is recession-proof.
While this won't be the last crypto winter, there are some silver linings.
These downturns is it kind of eliminates the weak players and lets the best players survive. And so as we move along, the best technology, the best protocols, the best companies survive, and the users who use them continue to gain benefit.